While North American markets seem to be reacting positively today, Asian markets are not doing so well. The Nikkei in Japan closed down 4%. Well, joining us now to make dollars and cents of what this means to your finances is Frank Wigington, a certified financial planner with TriDelta Financial Partners. Hello, Frank. Thank you for joining us.
Thank you.
So, we heard from one of the viewers in the story there. They have RSPs. Their parents are close to retirement as well. Should they be concerned?
Well, I think depending on what stage of life you're in, you do need to have slightly different concerns. If you're just starting out, this may be a tremendous opportunity for you to be getting involved. But if you're already in a working, trying to save for retirement, you have a lot of questions, and you really need to be prepared to have those questions answered. You need to go out, find a professional, find a planner, put a plan in place and be ready for it.
So you said get more involved. Does that mean this is actually a good time to buy? We've been hearing that, but should you be speculating as well?
Well, it's speculation if you don't have a plan in place. If you do have a plan in place and you're ready to make a move, then there's a lot of very high quality companies that have been, I think the expression used is throwing the baby out with the bathwater. These are good quality companies that have dropped 20–30% purely out of fear and speculation.
Hello, everyone, and welcome to City Online. Well, many people are calling it Black Monday. The House failed to back the Great Bush bailout of Wall Street. So now what? And what does that mean for your personal finances? Give us a call at 416-870-7716 or 1-800-295-5463. Share your thoughts on what's happening in the U.S. Are you worried that the economic problems to the south will affect your investments and your future retirement plans? Are you wondering what to do? Hold tight or look for bargains and buy? Hopefully, we'll have some answers for you on City Online today. I'm sure we will. And you can also have your say by taking part in our daily phone poll. Here's the question. Will you change your personal investments because of the U.S. economy? If you say yes, call 416-870-2242. No, 416-870-4444. And I'll have the final results for you at the end of the show. And joining us live with more on today's topic is Frank Wigington, a certified financial planner with TriDelta Financial Partners. Hello, Frank. Welcome back.
Hi. Thank you.
So obviously this is a concerning time for a lot of people. A lot of people are thinking about their retirement and saying, oh my goodness, look at those stock markets tanking.
Absolutely. And people are very anxious and very confused as to what's going on. They don't really understand the whole credit crunch issue and what's happening there. And they don't really understand why the markets are reacting the way they do.
So what is the credit crunch issue? What's causing all this, the problems down south?
Well, a lot of bad loans that were sold from the banks onto the bigger investment houses. And then, of course, the people who got the bad loans aren't repaying them. So now the people holding those loans, which are, the Morgan Stanleys and the Lehman Brothers and those people,
big financial houses,
are being caught having to foot the bill. And of course, they don't have that money either. So it's now fallen on the federal government to step in and say, can we back this and can we do something about it?
Okay, so for the consumer here in Canada, a lot of mutual funds have investments in the States.
Oh, absolutely. Many of them do. There's a lot of very large companies that are very profitable that have been beaten up, and the mutual funds buy into these companies because the fundamentals of the companies are solid, but what's happening is the economy is weakening, and because of all the uncertainty, everybody's saying, I don't want to take a chance. I'm getting out of this, and they're putting their money into cash and things like that.
So if you look at your portfolio and you look at how it's divided up, what are the concerning areas that we should be, seeing our financial planner about?
Well, I think the biggest concern is people are taking too much risk than what they need to take. And the reason why is because they don't know how much risk they need to take. And again, this comes back to financial planning. They need to go to their planner, they need to sit down and say, what am I trying to achieve? What are my goals? So how much risk do I really need to take to achieve those goals? So if, for example, if you only need to achieve a 7 or an 8% rate of return on your overall portfolio and your investments, you don't need to be going after 15 or 20% returns and that higher risk that's involved in that. You may also be moving more of your money into things such as bonds and preferred shares and things that aren't nearly as volatile as some of these common stocks.
So are those the safe areas right now? If someone is 2 years or a year away from retirement, what do they need to do right now?
Well, they need to be sitting down with a professional to review their overall situation. If they're not already out of the market, it's too late. This is not a time to be selling. We are at levels from 2002 in the markets, and so what we're seeing is an opportunity for you to review your whole plan and say, okay, what should I be doing going forward?
All right, let's take a call now, and let's say good afternoon to Gilbert. Hello, Gilbert.
Yes, good afternoon. This is what happens when you run the stock market like a casino with few government rules to protect the investors. Now, the CEOs working for these stockbrokers, they should forget about their multi-million-dollar handshakes. Yeah. They deserve steel handcuffs. Ontario's stock market rules should be beefed up to protect the Canadian investors. Well, years ago, I worked in the stock market, and I saw what went on down there. That's why I don't have any stocks. That's the bottom line.
All right. Thanks, Gilbert.
You're welcome.
All right. And let's go next to Anders. Hello, Anders. Welcome to City Online.
Yes.
What is your concern?
My concern is as follows. I don't know if your panelist knows this, but the median income in the province of Ontario is flatlined over the past couple of years, and it's because people like myself who are in their 30s and supposedly in their earning prime have just finished their college university education, but they're still working MIC jobs, which means they're not earning their full potential, which means I don't have anything saved up for retirement because society hasn't given me that privilege. So this is my view for this province. If my generation is not elevated into our full earning potential to augment the lost revenue that's going to be generated by the baby boomers retiring en masse and sucking all their money out of the markets and asking the government to give them every single pension benefit that they work for, this whole continent is doomed, and martial law is just around the corner.
All right. Thank you, Anders. Well, you know what? Maybe there are a lot of people in Anders' situation where you're young, you've just graduated from school with a student debt, you're not in your ideal job right now, but you need to contribute for your retirement. You need to start thinking early. So how do you do that?
Well, again, the earlier you start, the easier it becomes. I think by the sounds of the first two callers here is that there is a lot of frustration and a lot of anger on, when you're 30 years old and when, I'm not sure how old Gilbert was, but when you're, 50 or 55 or however old he is. And the thing is that it does start with putting a plan or an objective in place. If you're just working and spending your money day to day and not really trying to do something, then your goals aren't going to be achieved because you don't have them set in place.
So instead of buying coffee, maybe use that money and contribute that to the RSP and make coffee.
Yeah, the latte factor, as they like to say. Yeah. No, really, I think it's Anders.
Yes.
Anders' case, what he needs to do is sit and reevaluate. Okay, are there better jobs out there? As he mentioned, as the baby boomers start leaving the economy, there'll be an opportunity for more and more jobs as they step out of the workforce. Somebody needs to replace them.
Right.
So he may have an opportunity to move up into out of the MIC jobs, as he calls them, and into something that's a little more wealthy. And if he's really struggling on a day-to-day basis, sometimes you have to pick up a second job.
All right. Okay, let's take a break on that note, but we'll be right back to answer more of your calls and questions about your personal finances on City Online after this. Stay